So now I welcome Shari Noonan and Joel Steinmetz from Rialto Markets.
Hi, good afternoon.
It looks like Joel's with us as well. Yeah, sorry about that. We seem to have had some technical difficulties. Shari, your resume includes major roles at Goldman Sachs, Deutsche Bank, and Instinet. While Joel, you have witnessed many technological changes in the markets during a career that's included Citi, Citadel, Instinet, and Liquidnet. Obviously, there's more career background on you both and your team to be found at the company website, rialtomarkets.com. So, Shari and Joel, please now take us further on from that video, unfortunately curtailed slightly, and how Rialto Markets aims to transform the private securities market, and particularly the potential of private equity crowdfunding and secondary trading private company shares. Now, who wants to kick off?
I'll go ahead and start, and then Joel. So Joel and I have known each other for over 20 years, maybe 20, 25 years. So I'll go ahead and kick it off, and then turn it over to him to add anything that I've left out. But first of all, I'd like to start by saying thank you so much, Steve. We're really excited to be here today. Joel and I met at Instinet many years ago, and we were really fortunate to be able to participate in the transformation of the equities market back when that was moving from voice to electronic. And we participated in the build out of that infrastructure. And so when we started Rialto Markets, we were really struck by the lack of infrastructure in private markets, and also the trend in companies staying private longer, and the fact that, it was really difficult for all of these companies to scale and to remain private, and for this entire ecosystem to sort of scale without that requisite infrastructure. And so, here we are today. Rialto Markets is a broker-dealer that empowers companies in their private markets capital raises, really through self-hosted solutions. And we do that through across all private markets, regulation CF&A primarily, but also regulation D. Importantly, I think to note, we also operate an alternative trading system for secondary trading. We think that the secondary trading market, while not here yet, much like the early 90s or late 90s with the equities market, when it was first transforming into the electronic market that it is today, this evolution is just beginning in private securities, and we really believe that secondary trading is going to be increasingly important for private securities and private companies.
Yeah, I'll just add a little bit, perhaps, where we look at the markets in general, and it's not necessarily that the solutions need to be so radically different. Or for that matter, that the problems are so radically different. But what's interesting is that the markets have opened themselves up due to some changes. The fact that you have things like the internet that you didn't have 25 years ago just creates fantastic opportunities for an expansion of the markets. Similarly, private securities have increased dramatically in that amount of time, and probably partly because the access has been increased from what it used to be only for the public markets. And now we have this great access into the private markets as well, or potentially have the great access into the private markets. So companies that beforehand were only able to stay private for X amount of years, maybe 4 years or so, then they're going to have to go public in order to be able to get capital. Well, now there's so many avenues to get capital, even in the private markets, as those companies are staying private for significantly longer, 3 times as long as they had in the past. Well, if that's the case, how do we open that same world of opportunity to a much broader audience? In order to do that, we need to be able to not only deliver technology that does it, but also operate within frameworks that have been delivered for the markets to protect investors. So if we're able to combine the technology we have with the investor protection that's necessary and delivered by the regulators, if we can do something that combines those two, that would enable a much more expansive and enhanced private securities market.
Mm-hmm.
Well, thanks for that, Joel and Shari. That's fascinating stuff. And And I see that some of our audience are already responding, and we'll start adding some of those questions into the debate shortly. But while I continue to speak with Shari and Joel, I'd also encourage everyone in the audience to get involved and fire off their own questions via the chat, so we get plenty happening. We will either feed them in soon or add them in at the full Q&A session at the end. Shari, before we move on to questions such as the size of the market and commercial traction for your company, can you please tell me a bit about the journey that brought you and your team to this point? It's fair to say that you all had senior career positions in and around Wall Street. So what drove you to take what some observers might say was a leap in the dark?
Yeah, no, I think that's a really important point. We have a really exceptional team. Everyone on the Rialto Markets team has a really deep career and background and expertise in their domain field. And it's really one of the differentiators in our business. We find that quite often. It's a key piece of feedback that we get. In large part, we all came from capital markets. And I think what really drew us together collectively was the opportunity, sort of the blank canvas that we saw. There are really very few times that you can create something new. And really, it's, there are very few times that you can do that. And I think the team specifically has this rare ability to do both the groundwork that's sometimes not so much fun that you need to do in a new business and when you're building out something new, but also the strategic vision of where we need to go and how we need to get there. And I think we've been sitting at this really interesting nexus between the evolution of private markets and expansion of some market structure, as well as we do leverage and have a mandate around digital securities and that mandate. So we've got an interesting nexus, and a lot of our team members really resonated with one or both of those areas. And there was a large learning curve that took place in terms of coming up the learning curve there. I think one of the interesting things in finance is, usually it tends to be kind of siloed. And we often joke if you grew up in finance that, you sort of know something really well, very deep. But if you go to another floor, if you go to another area, you don't really know what sort of that area is working on. But if you sort of take that and then move it across to private markets and sort of this new area we're working in and the expansion of the regulation, certainly expansion in the Jobs Act and expansion in terms of what we're doing technologically, I think our team has done an amazing job in terms of expanding the knowledge base and being able to understand what we need to do within that regulated framework. And then how to build the operational scale and the technology around delivering that at scale and to the client base. Joel?
Yeah, I'll just follow up on that because it's Shari. The last point Shari said, I think, is so important. We looked at this market in general and said, you can approach this in two ways. We can go in and say private securities, digital securities are completely different than the public traditional world of securities, and therefore one is not going to have anything to do with the other. The other way of approaching this is saying, what can we take from the best of both worlds and bridge that gap so that we're able to deliver something that is much better than either one that exists. So 1 + 1 at that point will equal significantly more than 2. And so we went to a team, we looked for a team that actually would be able to bring some of that traditional knowledge and understanding into a new marketplace so that we can get the best lessons learned from the past and bring it to the new marketplace. So we have a specifically detailed while still broad understanding of the markets in general and what new technology can actually deliver. And the combination of those two is what enables us to deliver solutions that fit into what is necessary. And that's, the point Shari was making at the end, I think, about making sure people understand this and are educated in understanding what this new market can do. Well, in order to be able to do that, you have to work within the framework that they exist today. So we have people who have been dealing in operations of traditional markets for 25 years. both on the buy side and the sell side. And they know how to integrate the system so that the customer experience, whether it's the issuer, the investor, the retail investor, the institutional investor, any of the operations people, banks, payment systems, transfer agents, all of that is a known entity to our team. And so incorporating all of that into an infrastructure and bridging the gaps to make sure the customer experience, again, whether issuer or investor, is smooth, is just something we embarked on to assure that we would be able to reduce all the friction that exists within this marketplace.
Wow. It shows what a lot of thought and effort has gone into creating the company. Fascinating stuff. Thanks, Shari and Joel, on that one. We are still getting some questions in, and I think, if I may, I'll start feeding some of them in. One of the most interesting here is, are there restrictions on the kind of companies that you can help raise money or trade shares with? This is a question from Fraser Stanislas. Thank you, Fraser. I'll pass it over. Who wants to play with that one?
Sure, I'll start with it. Are there restrictions on the types of companies, I believe was the question?
Yeah, that's
the
it.
kinds of companies that we can help raise capital. Well, there are I'm going to call them requirements over restrictions. Restrictions would be if they're from places that we can't do business with, but there are some minimum requirements that will be needed. From Rialto's perspective, we only deal with regulated securities. So that means you are going to be Reg A, Reg CF, Reg D, something that will go through the regulators, and you will have those necessary requirements under those specific regulations. For us, if you are a regulated security within that space, we're happy to have a conversation with you. There will be other things that you need, whether it's around your financial world, legal world, et cetera. But like I said, those are not restrictions. They're more prerequisites. I wouldn't even call them requirements. They're prerequisites in order to be able to launch not only a campaign, but what we believe could be a successful campaign.
Okay. Interesting stuff. We're getting quite a lot in now. Here's one from Paul Bailey. I read that you have close to $1 billion in contracts signed since the beginning of the year. Can you tell us a bit more about the composition of those agreements?
So I'll jump in this one too, Shari, if that's okay. So first, we have those kind of contracts in, and we have surpassed the 1 billion mark. The composition of them are Reg A, Reg CF, and Reg D. And because of that, they have different amounts. Reg CF, maximum a company can raise is $5 million, whereas a Reg A, the maximum they can raise is $75 million. So within the Reg CF, the range is much smaller. Generally, we deal with companies that are $1 million or more, so somewhere between $1 million and $5 million. And when it comes to the Reg A securities, we have ranges everything from $15 million to $75 million. The industries that we cover are across the board. We cover real estate, cannabis, financial technology, medical technology. We have just a whole bunch of industries. We're not restricted in those industries. Each one of the offerings have their own respective investor circular that enables you to understand what the companies are doing and what the price would be per share, et cetera, et cetera. But the range of those from us, we are mostly involved in the Reg A securities. That's the largest dollar amount of securities we have. The number of offerings that we have is much closer Reg A, Reg CF, but obviously we have more money in the Reg A because they can raise more. And we do also, as I said, have a sprinkling of Reg D securities.
Great. Thanks, Joe. Here's an interesting one. When do you think the secondary market for private companies will become the norm? This is a question from Graham Field. Judging by the pace of things, this could happen quite quickly, couldn't it?
Yeah, I'll maybe start, and then Joel, if you want to add in after I start. I think, definitely there have been it's something that we talk about quite a bit, and there are some new some evolutionary items that we've been watching quite closely. I think the fact that there are several fractionalized assets that trade more often out there that are interested in some sort of platform to be able to trade on definitely makes it more amenable to an alternative trading system. I certainly think the fact that a lot of companies that have been raising under the Jobs Act now are coming up on a number of years since they've begun those raises. And so a lot of those retail investors have been on the cap table for a while. And I think that a lot of issuers, frankly, are becoming a lot more comfortable with staying private longer and not necessarily going directly to a NASDAQ or a NYSE listing. That's not to say that those issuers that we work with and that we list, or that list on any of the private alternative trading systems or marketplaces out there, necessarily have an issue with companies going on to NASDAQ or NYSE. We often talk to companies and say, this is sort of a place to be for now, and allow your investors liquidity or the optionality to monetize. And then you can always then have a plan to list and go public. But what it allows you to do, it allows you to really follow that plan and not have other pressure points that sort of build up. And so, what we're really seeing is we're seeing certain themes that are building, that are driving adoption in the secondary market for private securities. And those themes are, the fractionalization of everything, a lot more issuers looking towards the monetization and coming and speaking to us about coming on to the ATS. Joel, would you like to add anything?
Yeah, it's just there are a couple of things that are just practical in its adaptation, and that is companies that are going through Reg A raises are available for trading immediately. Reg CF and Reg D have a waiting period. So when a company's doing their raise in Reg A, they go through the process of getting qualified. Then they go through the process of raising their capital. And only after they've at least reached a critical point will they go on to a secondary market. So there is this sort of rolling approval, if you will, and or better yet, rolling adaptation that will occur within that secondary market. So I think patience is going to be a virtue, but when it hits critical mass, it's going to leave people really in the dust.
All right. Okay. Thanks both of you on that one. Will you be launching your own crowdfunding platform or stick to broker-dealer and secondary trading ATS solutions? That's a question from Ian Smith. I think you will have quite a bit to say on that one. Who wants to start?
One more time. I'm sorry. Can I didn't catch the question?
Yeah, it's a question from Ian Smith. Will you be launching your own crowdfunding platform or stick to broker-dealer and secondary trading ATS solutions?
I'll start with that, Shari. As far as the raise goes, capital raise for companies, there are really basically two methods you can use. You can go to a portal or some platform that has you and including 10, 20, 100, 200, whatever amount of other firms on there, or you can do what we call a self-hosted solution. There are benefits to each. We feel the benefits of having a self-hosted solution that allow you to keep all the information as an issuer, to make sure it's coming to your website, that you control all of that flow, if you will, is the better way to actually raise capital. And so our thought, sorry, go ahead.
Sorry, I'm so sorry to pop in. The only thing I'll add is depending on the size of the raise.
Yep.
Thank you.
Yes, that's very true. If it's a small enough type of raise, you're probably better off going to a platform. But if you're looking at something where it's going to be a decent size, we just feel there are quite a number of benefits, most of them around the fact that you really are controlling everything around your offering, including all the information that comes your way. And it's by customers being directed towards your website. That is the methodology we think is best. Will we subsidize that going forward? Nothing's off the table, as our president likes to say. But nonetheless, there are some real advantages, we think, to the way we're going about it today, for at least where the market is today.
And I'll just add on to that, we do integrate with other portals depending on what type of raise you're doing. So, what we really look at first and foremost is what benefits the issuer. And from an issuer perspective, when you're doing a large raise, you're usually laying out a significant amount of money in marketing. And from that marketing, you're wanting to get insight into what's working, from whether it's A/B testing or capturing the information of who's coming to the site, of what's resonating, what key messages are resonating. And so we really feel quite strongly that, and also controlling the branding. And so we feel quite strongly, as this market matures and as this market evolves, that's going to be more and more an attractive way for issuers to utilize the crowdfunding / Regulation A direct to the public type of raise. However, that is one community, that is one path. And there are other avenues in terms of communities to be accessed. And we often talk about diversity with issuers. We talk about the diversity of, accessing different investor communities on your raise and having a strategy for that. And because when you go out for your raise, if you're looking to raise $50 million, oftentimes you're not going to get that just through your website unless you have a very strong internally built community that you've built up. So this is something we often talk through with issuers when we work with them. But to be clear, Rialto Markets is not an investment bank. Rialto Markets is not, does not solicit investors on the issuer's behalf.
Okay, that's really good. You probably won't be surprised to learn that a number of questions are coming into the chat now about cryptocurrency, NFTs, stablecoin, that kind of thing. Yeah, you're both nodding there. There's a good one here from Henry Kiefer. He says, it seems like Gensler and the SEC are going after anything they think is security, specifically NFTs, crypto and stablecoins. Can you speak to how Rialto fits into the regulatory landscape and if you have plans to enter those asset classes? Who wants to take that one on?
I'll start by quoting what Joel said earlier, which is, we focus on anything that's a security. So, we're really looking and closely monitoring the SEC's guidance and their review in this space. But specifically, the reason that we spent 2 years working with the SEC and FINRA in expanding our mandate to include digital securities was because we did anticipate that there was going to be some expansion around this. So, we do anticipate that 2022 will be an eventful year in digital securities, and that there will be some lines drawn and a regulatory overlay placed in that. However, where that regulatory overlay falls is really, up to the regulatory authorities, and we simply follow their guidance. Bill?
Yeah, I would just emphasize one of the maybe being pedantic on the question. It said, "Do we plan on going into those kinds of securities?" I would say probably a more accurate way of saying it is when they come to us. Going to them means going into a different environment because it's currently a non-regulated environment. We believe, as Shari just described, that, and as the question implied, that there will be some regulation on some or all of those securities. When that happens, that sort of brings them into our regulated environment or a regulated environment. Once that is in the regulated environment, we believe that's the best place to operate, is within a regulated environment. It's the place where investors are protected, where issuers are overseen, and everything is done in the proper way. We want to stay in that kind of environment.
Yeah, a quick question from me, following on from that, both of you, is how soon do you think that might happen, though? There's been a lot of speculation, and we know that Mr. Genzer is a tough cookie by all accounts, but nothing seems to be moving at the moment. Have you got any kind of time span that you're thinking it might take? You're both smiling.
I'm going to jump in without an answer, but nonetheless, sort of a general view. Shari and I talk about this. We talk about it in the office often. Everything that happens, we live in our market today in a microwave society. Things that take 3 hours to cook in the past, in a microwave take 3 minutes, and that's what we're looking at now. So what used to take really long for it to happen is just looking to happen so much quicker. And I think actually that's very possibly what Genzel was doing with his last request for comment, was diminishing the time that is normally given, because the markets are moving too quickly. This market is moving so quickly that previous time frames just don't seem to apply to it anymore. And so I wouldn't venture a guess on how soon it'll happen, but I don't think you can measure these things and saying, well, in the next 3 to 5 years, this is what's going to happen. 3 to 5 years is a completely new world compared to what exists today.
Yeah, I would agree with that. I wouldn't want to venture a time frame, but I definitely think from all of his public statements, the chairman's been very insistent that this has to be dealt with in a timely fashion, which to me sounds like a 2022 type of time frame. So whether that means regulation by enforcement that kind of shows everyone else the way, whether that means regulation through actual rule writing, but I think it's some sort of clarity around the rules of the road.
Okay, interesting. Got a couple of questions. Well, one's a statement, really, and followed up by a question from Raphael Grosswert. I hope I pronounced that correctly. He starts, first of all, by saying, I am an issuer and using Rialto, and we are very happy, and our offering is direct. Dealing with them feels like dealing with a big brokerage firm. It's a hardcore finance team, and you have access to the CEO, and that is a big deal. I'm very glad we're using them. Okay, well, thanks for the advert there, Raphael. But the question arising then is, do the guys at Rialto Markets think that world instability will dampen the interest in startups? Bearing in mind, of course, we really are in the middle of a massive crisis.
So again, Shari, I'll just start again, probably with a more generalized statement. Since 2018, let's just go since then, about 4 years now, I am absolutely blown away by the innovation of so many people in the world, coming up with these startups that have just brilliant ideas that are really helping society, impact type of investment with just remarkable understanding. With that said, I think those ideas never get dampened. they're always available, and there are potentially new opportunities that are brought by certain instabilities that come into the market. What's particularly interesting and different today than X amount of years ago, when a crisis like the one we're having would exist, is that the avenues of supporting those kind of innovations is global and immediate. And that's a very big difference than what used to happen. It used to be where if a company came in, they had to go to a certain group of investors in order to get their money. And if those investors were losing money elsewhere, there was no way they're going to be able to invest. And maybe they were delayed because they were backed up. They were busy for the past 2 quarters and they can't get to it. Now, the fact that you can access the global markets on a retail basis and get to millions of investors with your idea, with the opportunity to invest, with all the rails and infrastructure necessary to get them to invest, those things, that existence should hopefully be able to mitigate some of the ups and downs and the vicissitudes that happen within these kinds of crazy times and crazy markets. And that's really where what excites us most is the ability to deliver that. If GameStop taught us anything, it's the power of the retail investor. That there really is a tremendous power in the globality of the ability for people to invest.
And I think that's one thing that we've definitely seen over the years is a shift in the mindset of both. So it's been these macro shifts, both in the availability of technology to invest, the shift in market structure where the SEC has made it available to invest, and provided the regulatory framework and ability to invest under U.S. securities law, and then the shift in mindset where more and more investors are, voting with their feet and saying, I'm going to take this percentage of my portfolio and really invest in things that call to me, and invest in things that I feel very passionate about. And whether that passion is, something that's med tech related or green tech or cannabis or gaming or whatever it might be, we are seeing more and more investors really open up to shift the way that they support their and invest their money. And I think that's a big shift that's just occurred quite recently, and I don't think that's going away, which is somewhat shifting the overall kind of pockets, which I think is quite positive for startups, because you have a multitude of avenues to go to, and not just one or two that when they get choked off, a lot of vines can die at early stages. You have many, many more avenues to go to.
Great. Just an aside from me, I mean, we've a very engaged audience today, judging by the quality of the questions so far. Please keep them coming. And we've had some fantastic insight from Shari and Joel over the past 15 minutes. I now want to start getting into some bigger questions that I know the audience will want to understand, like what's Rialto Markets' commercial traction and pipeline looking like for the year ahead and beyond? And what is the biggest challenge you're going to face in the next 18 months in delivering your vision? I realize there's a lot to take in there. So maybe Joel would like to take the first part of that question on commercial traction and the pipeline for the coming year and beyond. And then after that, maybe Shari, you can take over and look at the company's biggest challenge. Is that a good plan?
Sounds good. So yeah, our pipeline right now, we are working with over 30 companies. Like I said earlier, Reg A, Reg CF, Reg D. The pipeline is a wide range of industries. It covers a wide range of industries. We actually internally don't necessarily call that a pipeline. Those are contracts signed. In addition, we have a group that about matches that. It's also around 30 that are the pipeline, which are companies that we're talking to, and we're at various stages of getting the contract signed and over the line. The for us, getting those companies to a level of success, making sure they're able to raise their capital so they can perform the functions that their company does is of key importance to us. Making sure that the rails are smooth, they are today, but increasing and enhancing every ability we can give them so that more investors can be reached. And for that matter, investors can reach more companies. So as we expand this, as we expand the platform, we can start getting investors from one companies to start expressing interest in another. We can start getting data out to these companies as well. And those pipelines will continue to increase. What we have found for us, we really don't do any proactive outreach to issuers. They come to us, we get them as they come in. And we deal with those issuers as they come in, and they are repeat performers for us. Many of them are on their third or fourth Reg A or Reg CF. Some go from a Reg CF to a Reg A, and they just keep raising capital in those ways because they built up a community. Shari often talks about the advantage of Reg CF and Reg A. One of the greatest advantages is building a community. And if you can build that community, you can always go back to that community for the next raise. So we feel that that's an important aspect of the pipeline to make sure that it can continue to come. And the pipeline is not just more companies, but more offerings from the same companies as well. And that will double the expansion of what Rialto can do.
Okay. And that biggest challenge, Shari, for Rialto?
Yeah, I really think that, this is still a relatively young area. And so I think, from our perspective, we've built out infrastructure before, and we built infrastructure out from scratch and done it in a very fluid and dynamic environment in the past, where, things are changing and things are under sort of a regulatory microscope. We're very comfortable working in those environments. I think we're in a very similar situation here where things are moving quickly. We need to build out things quite quickly and scale quickly, and we've done this before. And so that's really the part of the plan that we're in right now is operationally and technically scaling both with our partners and internally with our own technical infrastructure.
And we talked a lot about regulation. One really interesting question that's come in from Henry Kiefer is, can you talk about the process you went through to get approval for an ATS and what your approval encompasses? I've seen other panels, especially with lawyers, that make it seem as though it's just a breeze. You just fill out an application, but I'm pretty sure it's not that simple. Is that right?
I'll start just because Joel and I have built out a number of ATSs, and alternative trading systems first really came into being in the early 2000s when Joel and I were working at big banks. That's really when they first started. They were first created, at least from my understanding. And when I first started working them, we built them out within the confines of big banks, and that's how they were utilized. But you really need quite a bit of operational expertise as well as technical expertise and regulatory expertise to operate an alternative trading system. So the process is you first are a broker dealer, and you get a broker dealer license from FINRA, or a mandate from FINRA. And then upon that mandate, then you go to FINRA and then the SEC with your outline of augmenting that with your alternative trading system plans. You need to, show them your system. You need to show them all of the controls that you've got around halting securities, around how you're going to prevent any manipulative trading, all of the reports that need to be run for regulatory purposes. And so it's quite an in-depth review by the regulators. And you receive approval for what you've written up. So, for example, we have approval for a particular slice of the market, private markets. Other broker-dealers will receive approval for the municipal market. And so not all alternative trading systems are sort of approved for the same, same sort of operations. And if you'd like to expand that mandate, you need to go back to FINRA and to the SEC to expand that mandate. And there are additional requirements if you'd like to operate within NMS securities, which are the national market system securities. All of those systems need to be connected to make sure that you're getting the best price on those securities. Those are the stocks that you think about with IBM, GE. Those are all the ones that transact on the national market system. So it's quite complex and not something that a lot of people know a ton about. But we've built and operated. Our team has built and operated about 9 of these. So it took us about 2 years took us a year to get the initial approval, and it took us about 2 years to get the expansion of the mandate into digital securities, just because digital securities is quite complicated, and there were a lot of questions around the specifics of digital securities that the regulators had.
Yeah, I just want to add to that. When it comes to the regulators and this process, the reason for it is the regulators are really doing, I think, a great job in their due diligence, just making sure that all the moving parts are considered. People think, well, I'll just file for this and I'll have functionality that allows people to match trades. There are so many other parts to it that are important, whether it's the security that goes into cybersecurity, whether it's clearing and settlement, functionality, halts on markets, all the regulatory rules and how they apply, whether you're going to have other professional investors, retail investors. There are rules around each one for the protection of the markets in general and the participants within it. And so all those moving parts have to be considered. Some people, I think, will go in and put in an application and they wonder why they got 100 questions back from the regulators. And the reason is because you only dealt with 2 component parts and there are 98 other ones. And so the regulators are being very careful, making sure that people are thinking about the entirety of the experience for all market participants before just rushing off and saying, yeah, sure, you guys are okay. And that's, I think, going to be very protective and very good for the markets. People will be able to trust it a lot more than they would have otherwise.
So interesting follow-up there from John Brazali. I hope that I've pronounced that correctly. Having put that structure in place, he's asking, have you considered private label hosting sites for clients to manage the process of attracting and taking investments? That's got to be an avenue, hasn't it?
Yeah, we actually offer that. We do such in a variety of ways, in a variety of forms. Not to go into now, it's a little too complex now, but yes, we think that's a very strong marketplace for us and a very important avenue to pursue, and we're happy to help companies as they look for it.
Okay. Andrea Gardner has fired off 2 questions. She's saying, what industry sectors will be strong for crowdfunding, and what is Rialto Markets' experience in these sectors? And then there's a rider to that. I ask because we are a biotech company and feel crowdfunding may be great for us. So can you give Andrea some advice there?
Sure, I'll start, and then Joel, you can follow. So I think really any industry that I think initially a lot of consumer companies, Brewdog Brewery is the poster child that sort of started way back in the day and had a lot of success. Anything that was a consumer product certainly is an obvious candidate, but I think over the years, other industries evolved that really the public resonates with. And I think this goes back to earlier comments around the public investing in areas that they believe strongly in. So anything around clean tech, anything around med tech. I think biotech is something that resonates quite a bit. We work with cannabis companies. There are other areas that we work in that, an area where people feel very strongly about and feel are going to be future industries, space tech. So these areas where there are a community of people that feel strongly and feel that they want to support the development and growth of the company, of the product, of the industry. I think those are really great candidates for crowdfunding. Joel, anything you'd like to
I'm just going to speak to two particular industries as examples. You might have, we deal with companies that just make movies, and they have a tremendous fan base. People love to get to invest, be part of it as a fan base. It's not necessarily something they feel strongly about emotionally, but they're just fans. But then you get into things like the med tech, and we do quite a bit of business in med tech. And in the med tech space, people are voting with their feet. And what they don't need to be the same kind of fan base of that particular company, because so many of them know someone who had the problem that the biotech or the med tech is trying to solve. And they know two other people. And the social media capability of it is remarkable, and how far that spreads. And when you can start building your community, again, we're getting back to that word, when you can build your community and start creating that world that are investors and users at the same time, that's the best thing you can have. And in spaces like, medtech is a good example. Biotech is a good example of places where everyone who's talking at a dinner table is going to somehow come up with, they know someone who had this problem. Oh, isn't that interesting? I know a biotech company that's looking to solve that. Those companies are the ones that will have the most success in the Reg A space.
Mm-hmm.
Great. Just a quick rider to that, a question from John Cousins, and perhaps if I could ask to keep things pretty tight from here on in, because we are coming up to the hour mark now. What are the differences in using a crowdfunding platform over having your investment offering on your own website? Any quick thoughts on that one?
Absolutely. So when you have a crowdfunding portal, basically you'll sign up to the portal and you'll be on a portal site with many other companies. And so that's really the experience that you'll have. And then you send out emails to your community, as well as when you do your own marketing, those emails will be driven to the portal to drive the investment. I think many times, or most times, you'll lose some information in terms of how successful the email campaign is going, or the marketing campaign is going. And a lot of times branding is sometimes challenging as you get larger. Now, again, if you're doing a small campaign, this might be great in terms of, you're raising $100,000, a couple $100,000. As the campaigns get larger, what we find is that issuers want their own branded site. As they run the campaign, they drive traffic to their site. That then lands on their site. All of those metrics are captured, which are quite detailed in nature, and communicated back and integrated back into that digital marketing experience, as well as any abandoned carts, meaning anyone who starts to fill out the information and then leaves the site, that information is captured and the issuer can follow up with them. I think the other difference is the cost of crowdfunding platforms. I'm actually going to turn that over to Joel because I don't have the latest numbers, but I think there's a significant variation between the cost of the crowdfunding platforms because it's an all-in-one cost versus the cost of the self-hosted platforms. Do you want
Yeah,
to?
yeah, I'll touch on that. Generally, it's somewhere, anywhere between 30 and 100% higher usually on the platforms in a combination of costs. It's not necessarily cash cost, but a lot of times the platforms will charge, let's say, some of them even 8% of in cash of the amount raised plus 8% of in warrants. So it can be quite costly, whereas when you're doing it on your own website itself, generally the broker dealer that you're going to be using, like a Rialto, is going to be performing a different type of function for you that will enable you to reduce the cost significantly.
Great, thanks for that. I'm going to start winding up now, but what I want to say is thank you to everyone who's put questions in the chat. We've had some great material come in, and people are obviously very much engaged, and we'll be reaching out to all of you in the near future just to cover off what you've asked. I'm going to close with a question of my own now, and I'm address this to Shari. As the female leader of a fintech company, what would you say the principles and culture of Rialto Markets is from yours and Joel's perspective as co-founders?
Yeah, I think that's an interesting question. I mean, I think we're always building and creating things. We do so in a regulated environment, though. So we certainly can't be in a world of move fast and break things. So, we certainly build, we've created a culture where we're constantly exploring and questioning and creating, and we certainly encourage that. But it's, break new ground, question, probe, and then build carefully because of the world in which we operate. But that's sort of what we've tried to build here.
That's great.
Our team has heard from me often. One of the things about culture is never leave any question unasked. Sometimes you say unanswered. We may not have the answer, but we will ask every question that comes to our mind. We ask, we probe, try to find out.
Well, thank you for that. Some good answers there. I'm going to now hand over to you, Shari, to summarize what we've covered in this event. It's not going to be an easy one, I know. We've covered a lot of ground, but please, if you would, I'd like to hand it over to you to summarize.
Yeah, I would just like to thank everyone who was able to attend today. And I know this is a really new area, and it's evolving and shifting, but I do think it's an area that is expanding quite rapidly. And so, whether you're an issuer that's looking to raise money, I think it's worth checking to see if it meets your criteria, and if this fits your criteria. It's definitely worth investigating. If you're an investor, I think it's something to look at. And certainly, if you're looking just at private markets in general, this is an area that's set to grow. We've even seen it over the last 6 to 12 months. A lot of interest from incumbents that are saying, this area is going to change, and we're really at the beginning of the first couple of innings. So we're really excited to see where this is going to take us, and we know the next few years are going to look very different than today.
Brilliant, thank you. Apologies again for some technical issues we had at the beginning, so you missed the Rialto video, but this webinar will be available in full on our YouTube channel in a couple of days, and we'll send a replay via the email too. So pretty much on the hour, I think we'll wind things up. Thank you for attending, everybody, and particularly our audience for engaging so much in the event, and Shari and Joel for taking us through some really quite complex topics and really rising to the top there. So thanks a lot. And finally, if you want to get in touch with Rialto Markets via the rialtomarkets.com website, if you have any questions, or you want to join the Rialto Markets investment community, so go to that website, rialtomarkets.com. Thanks again. Goodbye.
Thank you.